Alright everyone, welcome back to the channel for another Bitcoin update. So, quite recently I've been noticing that the Bitcoin hash rate is taking a massive nosedive from its previous all-time high. So in this episode, we're going to be looking at the Bitcoin hash ribbons indicator. This is simply an indicator that plugs in the raw values from the hash rate and slaps them over on the 30-day moving average and the 60-day moving average. What this tries to do is identify periods in which Bitcoin miners are in distress and maybe capitulating. It stands to reason that when the Bitcoin hash rate is going down, the network is less secure, there's less miners, there's less people validating transactions, and for whatever reason, miners are either getting exodized from the network or they're turning off their mining rigs for one reason or another that we won't get into for this video. But when that does happen, when miners start turning off their rigs for one reason or another, you get a capitulation known as the miner capitulation, and this is what the hash ribbons indicator tries to show you. So let's jump into this video and show you why, according to the hash ribbons indicator, the bottom should be very, very near. So the first thing you'll probably notice when we are looking at the hash ribbons indicator is we've got a series of colorful lines plotted over our chart. Now we've got predominantly these orange vertical boxes. There's 7 of them in total, and if you do zoom into every single one of them, you'll see that they are followed up by a brief stroke of a green line. Now what do these lines mean? Well, the orange line comes into play when you have the blue moving average cross below the purple moving average. Now, I'll just reiterate what these are one last time. If you do want to know, just look down below and you'll see. But the orange line comes in when the 30-day moving average, which is your blue line, crosses below your 60-day moving average, which is your purple line. Now this is a bearish flip. You can imagine this as like a bearish EMA flip. So, imagine that the orange line over on this screen is red because we've had a bearish flip. So once again, blue line crosses below the purple line, that's a bearish flip. And before you can become bullish, you're both, number one, waiting for the 30-day EMA to bottom. This is a quicker indicator, so the 30 days is going to bottom before the 60 days because it is only taking in data points from the past 30 days, so it's going to react quicker to the bottom than the 60-day moving average. With that being said, as soon as that blue line crosses back above that purple line, that's typically a sign that the bottom is in and the hash rate is getting ready to go back to higher prices. And with every single one of these, you can see, as soon as the green line starts to come in, which once again is where your 30-day EMA crosses above your 60-day EMA, every single time this is fired, this is typically a sign that you're getting ready for that next move to the upside. So let's jump in and look at our previous bearish hash ribbon flips, and let's see what we're currently doing at this moment in time towards the latter half of the video. So if we zoom into our 2018 bear market coming into 2019, what you'll see is that basically the price was really just going sideways at this point, and then as soon as the hash ribbon started to flip bearish, this actually called the breakdown long before the price action did. We were sitting at 6,300 and it took a couple of weeks before we actually started heading back down. We found our bottom around about December the 15th, and if you look at the 30-day moving average over on the hash rate, you can see the 30-day moving average only bottomed 5 days after. So once again, this is a moving average. It takes in data points from the past 30 days, at least the blue line does. So it's not going to call the exact bottom. However, once you see the blue line start to round out and you do finally get this bullish flip over on the hash ribbons, that has always been a sign that the bottom is in, and subsequently, looking at the price action, you can basically see as soon as that bullish flip came back into fruition, you started going off to the races. Now, you need a couple of days worth of a bearish flip for this to actually fire. On other indicators, you can zoom in and you can see that they almost flipped bearish, and on some instances they did, but it didn't fire. It needs a good 24 to 48 hours being flipped before it will fire this indicator. So the first time the hash ribbons flipped, it perfectly called the bottom. Let's see what happened the next time that it flipped. So this actually flipped before the March 2020 pandemic scare, and what you will see is a systematic drop in the hash rate over a couple of months or so, and with that the price action slowly lollygagged back down to new lows. Now interestingly, the hash rate actually bottomed all the way down here just before the price action did. So in this instance as well, while this wasn't a leading indicator for when we were going to start capitulating, this was a leading indicator for, you know, the bottom is very, very near. So in this example, you can see we flip bearish, price flip bearish afterwards. Over here, you can really already see, I mean, we were already flipping bearish into this, and we kind of just lollygagged sideways a bit before solidifying that low somewhere around about here over in the hash rate. So let's move over to our 2020 pandemic scare. Now, this one is definitely a bit different because bear in mind, we're looking at hash ribbon flips on both 30-day moving averages and 60-day moving average. So when we have a black swan event that just comes like bang, like that, and the capitulation happens between, you know, March the 11th down to March the 12th, the price really only has, you know, 1 day to react, and even the lower moving average, which is this blue line, basically crossed bearish as soon as the price had started to recover. So one thing that we can note with the hash ribbons indicator is because this is a moving average, this probably isn't going to help you in black swan events, but so far calling these bear market capitulations is really what it's built for. So let's move over to our next flip over on the hash rate, and what you will notice with this is this was more or less just a flip as the hash rate was going down while the price was stabilizing, and it happened very, very quickly. The hash rate dropped very, very quick, and then subsequently it fired back even quicker because, you know, on the blue line, which is the one that we should focus on, we can see this basically imminently dropped and then exploded to the upside. And when we look at the 60-day moving average for the hash rate, it barely moved. So what that really tells us is in the lower time frames, we probably did have an exodus of the hash rate. Miners probably turned off their equipment, miners were exodized from whatever country they were mining in, etc. But nonetheless, over on the 60-day, the 60-day was unbothered, and subsequently, you know, this flip was more of a fake out to the downside. When we do move over to our next hash ribbon capitulation, you can also see this was another premature fire on the hash rate on the 30-day moving average. The 60-day moving average barely moved, and you can actually see the price action actually moved up even though the hash ribbons indicator flipped bearish. So what you really want to see, you know, based on these capitulations, is you want to see not only the 30-day moving average move down, you want to see the 60-day moving average start to move down, because when we do look at the hash rate, you can see the hash rate is pretty volatile. You have these massive swings down, swings up, swings down, swings up, swings down, swings up, and when you do correlate this over to the price action, you'll sometimes notice the price action is really not as volatile as the hash rate, and that makes sense because the hash rate is a leading indicator for Bitcoin. It takes time to come into effect. If you have an immediate spike in the hash rate this week, it's probably not going to affect the price action for months on months on months on end. And that is, you know, in the best case that the hash rate keeps on spiking to the upside. And that's why when we're looking at the hash rate right now, you're seeing the hash rate has taken a pretty sharp nosedive all the way up from values around about 231 million to where it's residing now at 193 million. So what we can tell from this is this is basically dropped by, you know, well over 10%. But the price action is more or less lollygagging around the same regions. I mean, the price action has definitely moved to the downside from here, from 28,500 all the way down to where we're currently residing at 23,000, but it's taken its time. Hash rate capitulated a lot quicker than the price action, and once again, this is because it's a leading indicator. Now if we zoom over to our next event, once again, we did not really see the hash rate on the 60-day moving average start to move down. In fact, the hash rate kind of just stabilized in this point, with the hash rate on the 30-day once again being very premature because it is a short-term moving average. However, every other time you have seen this one didn't really move down too much, but it did start to rock back, and this is where you can see the price slowly lollygagged until we had that flip where the hash rate was curving off over on the 60-day moving average, and once again 60-day moving average moving to the downside here, and this is when you had a massive minor capitulation. So we've talked about all the first events. Let's look at this event now. The reason why I mentioned minor exoduses and instead of just saying miners turning off their machines is because sometimes miners are forced to turn off their machines, and this is exactly what happened over in this market structure back here. If you were trading Bitcoin back here, you remember that this was the time that China basically said, hey, turn off your machines. You're not mining Bitcoin in this country anymore. And subsequently, they obviously had to comply. They had to turn off their machines, and less people, once again, stands to reason, less people have their computers on mining Bitcoin, the less secure the network is. Subsequently, the hash rate goes down, because the hash rate is really just the amalgamation of all the computing power of all the computers that are mining Bitcoin, validating transactions, and all of that good stuff. So you witnessed a few fake outs over on this, but once again, if we pay keen attention to the 60-day moving average, which is the purple line kept capitulating, and as soon as the purple line started to move back to the upside, the bottom was very, very near from that vicinity. The bottom fired here at 29,962, and the hash rate started moving up at round about the time where the floor, well, as you can see, this was where the bottom was down here, at 47,700. So it was definitely about 17,000 off at this moment in time. That was more than a 50% deviation. But what you will notice is where the exact bottom was called was where the 30-day moving average bottomed. And once again, if we go back to here, if we look at where the 30-day moving average bottomed, this was where the price action bottomed in this capitulation. So what we do know from looking at our data so far, if you're looking at a minor capitulation, you first of all want to make sure that not only the 30-day moving average, which is capitulating, which is the blue line, you want to make sure the purple line, which is the 60-day moving average, is also capitulating. Otherwise, it might just be a quick event like that, and subsequently the hash rate will rise. When you look at the 60-day moving average, if you are witnessing a capitulation in it, obviously followed up by what's happening with the 30-day moving average, that is a sign of minor capitulation. You can't just look at the 30-day moving average, you also have to have confirmation from the 60-day moving average. And once again, when you have confirmation of both of those, you have the hash rate on the 30-day calling the bottom over in this market structure, you have the hash rate in the 30-day calling the bottom in this market structure, and then moving back over to this massive example where you had the massive minor exodus, the hash rate really started to bottom exactly here. This was, let me find out, so 30, look at the hash rate on the 30-day, 95.5. It was its lowest right here. So this was exactly where the low was on the 21st of July. When was the bottom? The bottom was on the 20th of July. So why am I looking at this? Why am I looking at previous examples where the hash ribbons indicator has called for a bottom after a capitulation in miners? Well, once again, because we're looking at the hash rate recently and we're seeing the hash rate is turning down. In the past 2 days, or the past 3 days actually, since the 18th, it has actually been turning up. But bear in mind, it's had multiple times where it has turned up since its all-time high and made a lower high every single time. So we want to start to see the hash rate turning up and tailgating. We want to see this start running back up to the upside before we do once again get bullish for Bitcoin. But a great indicator which should tell us when the hash ribbon or the hash rate bottom is near is once again these hash ribbon indicators. And if we do look at what they're saying at this moment in time, you can still see the 30-day moving average is heading down very, very strongly, but also the hash rate on the 60-day moving average, the purple line, has only recently just started to head to the downside. Now, let's see when this has started to head down. So it's been very, very recent. This has been running up until June the 15th, and this has basically been stagnating since then, and it's really been dropping off since the price was round about 21,500. And what you will notice is the price has been moving up while the hash rate has been moving down. When have there been times that we have bounces after the hash ribbon starts to turn to the downside? Once again, when we look at these, the 60-day moving average starts to move to the downside, everyone gets over exuberant, the price has a bounce back in the 2018 bear market low, and until the 30-day moving average bottomed, the price action didn't bottom. So At this moment in time, the 30-day moving average for the hash rate is still turning down. We're getting new data points from the hash ribbons indicator every single day. Once again, bearing in mind, these are moving averages. We're simply plugging in the raw values from the Bitcoin hash rate into the 30-day moving average and the 60-day moving average. And with these set of moving averages, we should be able to identify when the miner capitulation is done for Bitcoin. We are once again waiting for one of these green vertical bars to show themselves over on the hash ribbons indicator, and at this moment in time, both the 60-day and the 30-day moving average are heading down very, very strongly. So at this moment in time, what the hash ribbon indicators are telling us based on previous capitulations is we have not yet reached our bottom, but we are in the stage where both the hash rate on the 30-day moving average and the 60-day moving average are capitulating, and we're simply waiting for this bullish flip of the 30-day to cross above the 60-day moving average to mark the apex of the minor capitulation for Bitcoin. So all I've got for you for the hash ribbon indicators. I hope you enjoyed today's video, and as always, my friends, cowboy out. Peace.